Hot inflation reading reinforces the Fed's cautious approach to rate cuts in 2024. 58. Fed will and #39, respond to reality and #39 of inflation data. Economists scroll back up to restore default view. Jennifer Schonberger, senior reporter. Tuesday, February 13, 2024 at 10:23 a.m. Eastern Standard Time. In this article, DJI, minus 1.38%. IXIC, minus 1.61%. GSBC, minus 1.35%. Fed officials have been warning that more time is needed before rate cuts can begin. A hotter-than-expected inflation reading Tuesday reinforced that cautious view. Investors are starting to listen. Markets are now pricing in a nearly 80% chance the Fed cuts rates in June, dialing back previous bets the central bank would begin cutting rates in May. That shift followed an announcement Tuesday from the Bureau of Labor Statistics that the Consumer Price Index, CPI, rose 0.3% over last month and 3.1% over the prior year in January. Both measures were higher compared to economists' forecasts. On a core basis, which strips out the more volatile costs of food and gas, prices in January climbed 0.4% over the prior month and 3.9% over last year. The core figure is still double the Fed's target of 2%. The much-anticipated CPI report is a disappointment for those who expected inflation to edge lower, allowing the Fed to begin easing rates sooner rather than later, said Quincy Crosby, chief global strategist for LPL Financial. Across-the-board numbers were hotter than expected, making certain that the Fed will need more data before initiating a rate-cutting cycle. The Fed has a lot to think about, Somm Consulting founder Claudia Somm told Yahoo Finance Tuesday. Fed officials have been trying to send signals over the last month and a half that cuts will likely happen later than some investors might expect. Fed Chair Jay Powell made that clear in a January 31 press conference, saying that officials want to see more good data and get greater confidence about the direction of inflation before easing monetary policy.